Welcome back to Alpha Recap, your after-hours rundown of what mattered in the market today. We closed the week with rotation and some headline-driven moves, and we've got a lot to unpack. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Plenty of headlines today. Sector rotation, a few concentrated winners, and then a cluster of legal notices that created idiosyncratic noise.
Let's start at the top. Markets closed the day with a clear tilt towards semiconductors and Medicare-focused insurers, while a swarm of shareholder litigation notices stirred volatility in a handful of mid-cap names. Big picture first. What jumped out to you?
What jumped out was flow and headlines driving price action more than fresh fundamentals. NVDA finished the day up about 2% on heavy activity, and the Bitcoin futures exchange-traded fund sold off, and a leveraged small-cap inverse ETF also dropped noticeably. So it felt like money chasing the momentum in some spots and exiting risk in others.
Okay, let's dig into NVIDIA. It gained roughly 2% and traded heavy volume. Can you explain why volume matters here in plain terms?
Sure. Volume is basically how many shares changed hands. When you see well above average activity in a high valuation name like NVIDIA, it suggests that the price move is supported by real demand rather than just a few big trades. We saw about 164 million shares trade, which is a lot. So analysts we talked to said that small bits of news or even speculation can have outsized effects on these names because the valuation inputs make models sensitive to changes.
Right, so more buyers equals more confidence the move could stick. But momentum can fade too.
Exactly. If the volume fades next session, mean reversion becomes more likely. So follow-through is the signal to watch.
So what really stands out here is the interplay between headline flow and liquidity.
Yeah, that tracks.
Now on the Medicare and health insurer side, United Health and peers posted sharp gains. Talk to me about the drivers there.
Traders rotated into health insurers looking for cash flow resilience. United Health led the group, and several comparable names posted double-digit intraday moves, which force relative valuation adjustments. In plain English, some traders moved money into what they see as steady, cash-generating businesses, and that pushed prices higher across the sector.
So it was partly a safety trade and partly a re-rating?
Right, and the market is sensitive to shifts in where cash flows are expected to come from. Analysts noted this as a rotation toward defensive cash flow.
Okay. Let's switch to the other big theme, legal and governance notices. This was a heavy one today.
Multiple securities fraud and governance notices came out Friday. Companies named included Freesia, Graphic Packaging, Sport Radar, and even a fiduciary alert tied to Nike. Those notices are basically solicitations or alerts that suggest plaintiffs might pursue class action or fiduciary claims.
Briefly, what does a class action solicitation mean for a stock? People hear lawsuit and immediately think big downside.
Good question. A solicitation is an early step. It tells you plaintiff lawyers are looking for lead plaintiffs. It creates headline risk and can reduce liquidity because some holders step back. But it's idiosyncratic. Some notices never lead to major payouts or material business disruption, while others become multi-year headaches. Event-driven funds watch docket timing closely because the lead plaintiff appointment and initial motions are near-term catalysts.
So it's headline-driven volatility until the courts give more clarity.
Exactly. And one useful point, when you see multiple unrelated notices across sectors on the same day, it often reflects increased plaintiff lawyer activity rather than a systemic problem. That increases the chances of episodic volatility across unrelated names.
Honestly, I was a bit surprised by this one.
Lawyers staying busy, yes.
Short reaction.
Big move.
Let's talk ETFs for a second. The Bitcoin futures ETF finished down about 2.7%, and a leveraged small-cap inverse ETF was down about 4.2%. What are the implications for volatility and execution risk?
When high turnover ETFs swing hard, it widens bid-ask spreads and increases the chance that some leveraged or tactical strategies will hit margin triggers or rebalance in stress conditions. For traders using these instruments tactically, that can mean higher execution costs and more short-term volatility than expected.
Not a great day for those trades.
Nope.
Switching gears to the growth and product updates, there were a handful of company-specific wins today. Walk us through the most notable ones.
Greencore reported AI agent stack traffic up about 207% quarter over quarter and over 1 million requests from the Asia-Pacific region, which signals accelerating commercialization. Soteria licensed a thermal event detection tech for battery safety, pointing to consolidation in battery safety IP. Brook 37 landed placement across 54 Texas Costco warehouses, which is a meaningful distribution milestone for a direct farm beverage brand. And a private app studio launched a study app on Android, less immediate market impact but worth tracking for adoption.
So these are all distribution and commercialization flags, not necessarily revenue proof yet, but directional signals?
Exactly. With Greencore, you want to see renewal and expansion cadence. With Brook 37, the key is sell-through at those Costco locations. Licensing deals in battery safety suggest OEMs continue to buy safety IP rather than build it in-house, which matters for suppliers and licensors in the EV and storage supply chain.
Okay, quick confirmation. These are signals that could matter if the next updates show durable monetization.
Right.
Let's cover a few analyst and policy notes before we wrap. What moves should listeners be aware of?
JP Morgan upgraded Chipotle, citing a valuation gap and setting up a re-rating narrative for quick service restaurants. Citi flagged data points to watch at Apple's developer conference for services and software implications. Goldman Sachs highlighted selected Canadian oil names where free cash flow could grow by about 137% for a subset of stocks. A reminder that energy coverage is focusing on cash generation. And on the policy side, the aluminium tariff anniversary remains a factor for domestic producers and industrial input costs.
All important context for sector allocation decisions.
Yeah, analyst calls can be catalysts when they line up with flows. Upgrades and pre-event notes matter more than people often give them credit for.
Public health made the briefs too. The New World screwworm detection in Texas. Quick note on that.
The American Veterinary Medical Association is monitoring that, and if it spreads, it could become a supply chain and margin story for animal health suppliers and meat processors. Right now, it's a regional risk with potentially material downstream effects if it expands.
Got it. All right. Before we close, what should listeners be watching when markets reopen?
First, Apple's developer conference follow-through. Citi flagged specific metrics that could move service margin assumptions. Second, any lead plaintiff motions or docket activity for the litigation notices we discussed. Those are the next concrete steps. Third, whether NVDA and the United Health Group sustain volume. Fourth, continued heavy ETF flows in the Bitcoin Futures ETF and the leveraged small cap inverse ETF. Those could widen spreads and force rebalances. And finally, any USDA or state veterinary updates on the screwworm situation.
Short reactions.
Right. Worth watching.
Let's end with clear takeaways for listeners. Bullet style, quick and tangible.
Okay, 1. Flow mattered today. Heavy volume amplified moves in high-profile names, especially NVDA and the Medicare insurers. 2. Multiple securities, fraud and governance notices increase idiosyncratic headline risk. Watch docket timing. 3. Volatile ETF flows raise short-term execution and liquidity risk for leveraged and tactical strategies. 4. Commercialization signals in AI traffic and battery safety licensing are steps toward revenue but require follow-up proof points. 5. Analyst notes and policy anniversaries remain real catalysts when they line up with flows.
Great summary. Quick reminder, this discussion is informational only. We're not recommending buying, selling, or holding any security, and this is not personalized investment advice. Analysts note trends and data points to help listeners do their own due diligence.
Exactly. Use this as color for your research, not as a signal to trade.
All right. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you next time after the market closes.